Hey guys, welcome back to Black Ambassadors of Change. This week we're going to talk about personal financing. We're going to touch mostly on how to apply for a personal loan, business loan, or home ownership loan, and how to clean up your credit. So we have a lot of great information today for you guys. Don't forget to like, share, and subscribe. Hey guys, welcome back to Black Ambassadors of Change. This week we have my man Gene here. He's
senior relationship banker at a
major institution. Yeah. There you go. So this week we basically going to talk about a few things. We're going to talk about personal finances. We're going to talk about what is needed to get a loan, a personal loan, maybe a business loan, and a home ownership loan. We're not going to go too much in depth, but we're going to give you an overview so you can have an idea of what you need to work on. Okay, so Gene, how long you been doing this?
I've been working in a bank financial institution for over 5 years now, so about 6.
Okay, good. So you're pretty experienced. So let's go from the beginning here. When somebody come into your institution, what should they carry with them if they need to open a bank account?
Every financial institution is going to ask for different documents.
Okay.
But on average,
Yeah.
you should bring in a current ID,
Okay.
your social if possible,
Okay.
and then you should also bring a utility bill.
Okay.
And that should be enough for you to open up an account.
Okay.
But
All right.
there's some places that may ask for more documentation.
Okay, more documentation as far as
It varies.
Okay.
Every institution is different, so I'm not going to speak for all of them.
Yeah.
But for what I experienced,
Yeah.
those two documents, the social security card, your ID, and your a utility bill is normally all across the board. That's what they ask for.
Okay, so once you open a bank account, how long would it take for you to establish your credit, as far as so you could maybe apply for a loan, a personal loan, or bank, or a business loan, or even a home ownership?
I think with credit, it goes down to different compartments. Right?
Okay.
In order for you to build your credit, having credit for a long time is one of the stipulations on how they could see whether or not you're credit worthy to purchase a home.
Okay.
So they break it down by these 6 compartments. Credit history being one. Then your credit inquiries.
Right.
So if you're inquiring from TD and your Citibank and you're doing that all consistently and
Yeah.
months,
Yeah.
it's going to affect your credit. So you want to be very aware of that.
Okay.
Also, your how can I put it? Your usage.
Okay.
So usage being that the amount of credit that you have if you have a credit card.
Yeah.
If you're spending over 30%, is going to affect your credit. So you want to make sure that you go under the 30% mark. So if you do have $100 on a credit card, right, and that's your limit,
Yeah.
you don't want to. When the statement comes,
Yeah.
you don't want to surpass $70, right?
Right.
You want to have at least you want to have 30%, 30%, which is $30.
Right.
You want to stay within that threshold
Okay.
of having a balance. If you surpass that, then you're going to have a negative impact on your credit.
Okay.
So you want to be aware of that. And then late payments.
So talk about late payments. How does that affect your credit?
Try to be on time.
Because we all had late payments
Try
in
to
our
be on
credit
time.
card.
They're not saying to pay your full card.
Right.
They're just saying make the minimum.
Okay.
Minimum's normally what? $15,
Yeah.
$14. Just pay the minimum. That's all that they're asking. And then total available balance and your available credit. Those are things that they look at when they make the judgment of how creditworthy you are. So as long as you're keeping within those guidelines, you should be fine. One of the tools that I use to look at my credit is TurboTax.
Okay.
TurboTax has a great tool. It shows you the 6 components that I mentioned.
Okay.
It also shows you how to calculate different things that you may hear from a banker, like your DTI, which is your debt to income ratio.
There you go.
So you want to
Explain that a little bit for people.
debt to income ratio is one of the components that they use to see whether or not you can afford the loan that you're going for. So they calculate the minimums that you have.
Yeah.
So whether it be your mortgage, right? Your credit card minimums, car loan minimums, car loan minimums just mean your payment, not the entire balance. They just look for a payment on a monthly basis, and then they divide it by your total income, how much you make for the month, and then that will give them a percentage on how much you can actually afford for the month for you to be current. On average, majority of the banks try to make sure that they lend to somebody that's below 30 to 40% DTI.
And what is DTI?
I can't speak DTI.
DTI,
yeah, debt to income ratio. But I can't speak for now because a lot of things have been changing since the COVID situation has come. But on average, that's what they've been asking for, like somebody that has lower than 30 to 40% of debt to income ratio.
Okay. So how long is the process generally to apply for a personal loan?
A personal loan, like I said earlier, it varies based on like your situation.
Gotcha.
And the bank, financial institution.
Gotcha.
But if you have all the documents ready, your credit's good, your DTI is within the guidelines, to get a loan should take no more than a week, less than a week, 3 days.
So, that's it?
Yeah, quick. I mean, if everything's in guidelines.
Yeah. Okay.
But now, if you have great DTI, but your credit score is terrible, they may ask for additional documentation, stuff like that. So, on average, it only takes 3 days.
What are the 3 things you would recommend that somebody have even before they walk into your institution?
In regards to
maybe having the paperwork together or the things together that they need definitely if they want to apply for a home loan or a business loan before they even walk into your institution?
I think you really have to keep in mind that a lot of it is based on your credit and a lot of it is based on your debt to income ratio. I think we mentioned that a little bit prior.
Yeah.
But those are 2 of the major components and saying that the person's approved or not recommended for the loan.
Yeah.
So in terms of a mortgage, those are the things that you need, including a down payment.
Okay.
The bigger the down payment, obviously, the lower your monthly payment is going to be, right?
Yeah.
So
you have a percentage that you recommend that you work on, say for instance?
I mean, everybody's case is different.
Okay.
As much as you can, the more the better.
Yeah.
Because it's going to bring down your monthly payment a lot lower. Okay. So keep in mind that. And then for a business is very different.
Right.
Because they take into account not only how much you made for last year, they take into account what you made for the year before. So when you show up a negative balance on your taxes, it makes it difficult for the bank to see that you're capable of making those monthly payments for whatever loan that you want to take, whether it be a business line of credit or a loan. Yeah. So you want to keep in mind that. But I think New York State has given a lot of resources for people that are starting businesses. So if you are starting business, that doesn't mean that the bank wouldn't work with you. They have other ways that you can go along to getting that loan that you need to start up your business. You go through the SBA, which is the Small Business Administration. Small Business Administration. I was gonna let the motorcycle go by. Small Business Administration, and they do a great job of showing you different funding avenues that you can go to get your business off the floor. So I think that's something that you really have to keep in account, your DTI and your credit.
Okay. As far as you mentioned the Small Business Administration, so do you guys recommend the Small Business Administration as a resource once a person get into your bank and speak with you, or do you recommend that they do the research before utilizing the SBA, maybe try to find as much information from them before seeing you, or explain that a little bit?
I think with the SBA, first and foremost, right? Yeah. I think it's important to go into the bank and have a conversation with a banker, somebody that's aware of what you're trying to do, so they could direct you onto how you can do it properly and with the less errors, right? Yes. Everybody want to save time on getting everything accomplished. So I would talk to my banker first. Okay. And if you have a banker already set and you have a small business that you're looking to run and you need some guidance on doing certain things, I would definitely go to the business administration, small business administration. They have a lot of them in some of these colleges that's around. I know City Tech has a great business administration center where they show you how to write a business plan, show you how to create projections, et cetera, et cetera.
Yeah.
And they also partner you up with people that they know in banks that can help you get that funding that you need. So I would say that it's a combination of the two. Okay. But I would first go and have a conversation with my banker, because I think that's important. And I think a lot of people neglect to understand that, because they have the knowledge. Yeah. They will put you towards the right direction. Gotcha. I mean, if you have the right banker. But on average, I think all banks are very knowledgeable of their landscape.
Gotcha. Yeah. So you mentioned business plans. When you apply for a business loan, do you recommend that the person come with a business plan in hand?
It all depends on how long you've been in business for. Gotcha. Obviously, if you've been in business for a year, 2 years, it'll be smart to bring a business plan. Gotcha. Because your business probably hasn't have proof of concept yet.
Yes.
So
what is proof of concept?
Proof of concept is, say I'm selling a pen, right? And my pen is supposed to write in blue and red ink,
right,
and green ink,
right.
And you're able to erase, right. First year is probably just going to be an idea,
right.
Second year it's probably still going to be an idea,
right.
You have to show the bank that regardless of whether or not I haven't sold as much as I intended to, that I have an idea and I have a plan to make this big. So proof of concept is when you're unable to show in numbers what are you doing, but you have the idea on paper to show the banker what you're expecting to do.
Gotcha. It's more like a projection.
Correct. It's more like you're trying to have them buy into your idea.
Gotcha.
The more they buy in, the more that they feel comfortable with lending you money.
Okay.
Right?
Yeah. So we talk about what's needed. What's the biggest mistake you would say that a customer makes when coming in to apply for a loan with you?
Applying for a loan, say they don't have understanding of. It's not that they don't have understanding, but they fail to look at their credit score prior to coming in. We would like to educate as much of our customers as possible. And we know that there's a lot of people that come with dire needs that need the loan for financial issues, whether it be family, et cetera, et cetera. Yeah. But when you come in and you don't know your credit, you put us in a bind because we don't know whether or not we're going to be doing the right thing for you or we're going to be negatively impacting your credit score. So it's important that you look at your credit prior to coming to the bank. Right. That way both of us will be making the right decision for you.
So what is a good credit score, by the way?
Credit score varies, right? Different financial institutions would be are lenient, and there's some financial institutions that are very strict with their credit score. I would say anything above a 680 is decent, right? 640 is all right. You're working there, but 680 and above would definitely be ideal for like a
good rate.
Loan. Yeah, a loan. Not a good rate, but like a loan.
Okay, so to get the lowest rate possible, your score would have to be 750.
It would have to be higher. Okay. You have to get the higher your credit score, the lower the rate.
Gotcha. And credit score is tabulated on what, annual basis, monthly basis, quarterly basis? How is the score tabulated by the bank or the institutions? I would say Experian and these guys.
Whenever it's requested, it's pulled.
Okay, so it's not a set day where
it's
let's say that, where it's updated. It's only updated when it's requested by.
When it's requested, it's pulled. So now, I would say that for TurboTax and all these other places that gives you Experian and all that stuff that give you the credit score, they do it by the time that your credit card, its statement is pulled, right? I think like 5 days or 10 days after, you get an update on what your score is. Right. But for the bank, the minute that we put in a request for it, we're getting a request for it at that point in time. Gotcha. So whether it be in between your bills or You know what I'm saying?
Yeah, I
Between
totally
your
get
credit
it.
card.
Yeah.
That's the rate that that's the rating that we're gonna get.
Okay. So I wanted to talk to you a little bit because I notice in our community a lot of people use check cash in places, and I wanted to just talk about that a little bit. Maybe expand and tell the people what are the advantages of banking with a bank versus a check cash in place.
I was one of those guys too. I used to go to check cash in place when I was doing summer youth.
Yeah.
Working there because I felt like there was no need for banks.
Yeah. And why did you feel that way?
I felt that way because I don't know. I felt like it was just easier to get my money right then and direct, opposed to me depositing it into a checking account and wait for it to clear.
You still feel that way?
No.
And what changed your mind then?
I mean, what changed my mind is the fact that direct deposit is very much alive.
Yeah.
So the minute my check's supposed to hit, it goes right into my account. So I don't have to worry about standing online to cash my check.
Right.
So I think the difference between going into the bank and going to a check cash in place is that one is very service oriented and the other one is very relationship oriented. If you go into a check cash in place, they're just going to want to cash your check and have you go. They don't know your name. They don't care what your financial situation is. They don't know how to help you. They just know that they're here to cash your check and have you go.
And charge you for it.
Yeah. So it's a win-win situation for them because they don't have to worry about what you do for the money, with the money.
Yeah.
With a bank, now, I can speak for myself.
Yeah.
Being a relationship banker means more than just opening up an account for you and having you go about your merry way.
Yeah.
It's more about understanding what is your goals for the future. How can I help you reach those goals in the future?
Yeah.
What information can I share with you as I learn it? What will be useful for you at the age that you're in?
Right.
And many more things.
Yeah.
How can I help you with retirement? How can I help you with getting that home that you want? How can I help you with understanding what life insurance is about? A whole bunch of different things. So it's much more than just cashing your check. Because, I mean, with a checking account, you can just deposit in the account, wait for it to clear, take it out with no fee.
Right.
So I think there's way more value in having a financial institution than just cashing your check at a check cash place.
Awesome. Why should somebody get life insurance?
Life insurance, it's to protect your life.
Self-explanatory.
I think it's funny that there's a lot of people that can say they have car insurance, they have phone insurance, but don't have life insurance.
Right.
It just in itself shows how you don't value your life in some sense. But I know that everybody values it. They just don't put two and two together.
Gotcha.
I think it's important to see the fact that God forbid that you were to pass, right? You wouldn't want your family to mourn your loss, and mourn the fact that you're not there to financially help them in some way. Your check is not going to be in the utilities anymore. Right. Imagine that. Yeah. It's already hard now. It's gonna hurt you. So if you're able to put another $40, $20 a month away towards life insurance that probably has a value of $100,000, $200,000, that will make a difference. Right. I mean, on average right now, funerals are about $30,000. A good funeral. Yeah. I mean, not good, but like basic funeral.
Yeah, basic funeral.
Basic funerals, $30,000.
It's insane, man.
$30,000.
Yeah. It will put you in debt.
Yeah. You'll be mourning and hurting.
And hurting financially. Yeah.
So if you put $40 away, it's not going to hurt you.
Gotcha.
Just to protect your family, your loved ones. Yeah. That's the most you can do.
Gotcha. So at what age do you recommend people start with life insurance? Yeah.
I think the younger the better. Well, I don't think I know. The younger the better, because when you apply for life insurance, depending on the insurance that you get, they're going to require a physical. Yeah. And if they do, then the younger you are, obviously, the less illness, the less medical attention that you need. Right. Hopefully. So the premium, which is the payment that you're going to make per month, is going to be a lot lower than somebody that's aging. Yeah. And somebody that has ailments. So I would suggest to do it younger if possible.
So what are the different types of life insurances?
I'm not gonna get too far into depth with it. There's permanent and there's temporary.
Okay.
So term policy is a temporary policy.
Okay.
It just stays for the duration. Like, so if you say, hey, I want a term policy for 15 years.
Yeah.
After 15 years, the policy is expired. Yeah.
Okay.
But if you get a permanent policy, it's gonna last for your lifeline, your lifetime. So God forbid you pass in 103.
Yeah.
It's gonna be there in effect.
So can you cash out your life insurance if you say, hey, you know what, I thought about leaving X and Y for my family, but my family has been acted up. I don't want to leave that amount of money for them. Can you cash out your life insurance before you pass?
That's a good question. You can't. I mean, with temporary policies, no, right? They have no cash value when it comes to temporary policies. With permanent policies, some of them have cash value. And I don't want to get too much into the nitty gritty of the types of policies, but on average, yes, the majority of the permanent policies have cash value added to it. Would I recommend that you take it out? No, I wouldn't recommend that you take it out. There's other things that you can do that can build you wealth when you get older. If you need it for any like medical stuff, if you need it for because your pension has ran out, or whatever. There's other things that you can do. That's why it's important to have a conversation with your banker if you have these things on your mind, so they can help you and walk you through the different products and services that they can help can provide to you.
So, what is the benefit having a savings account versus a checking account? What would be the pros and cons of that?
They're very different, right?
Okay.
With a checking account, it's for somebody that's using the account a lot more frequently.
Yeah.
Savings account, it's for somebody that's trying to save.
Yeah.
With the checking account, depending on how much money you put in there, depending on the type of account in the financial institution, you can get a little bit of an interest rate.
Right.
And the same goes for the savings account.
Right.
What makes these two different accounts, what separates them, is the fact that they monitor your usage. Not monitor, but with a savings account, if you use it, how can I put it? If you have more than 6 transactions, right, per month, per cycle of the savings account, there's a federal regulation, right, that we have to like give you pretty much a strike. Okay. Once you're given that strike, you got 2 more strikes, and on the 3rd strike, that account's closed.
Really?
Yes, that account's closed.
Never knew that.
I had the same situation happen to me when I was at a financial institution. I was going to say the name. When I was a financial institution, I was at college. And when you open a college account, the banker normally gives you checking and a savings account simultaneously. I did that. I thought the savings account was for me to put my money inside, which I did. And then, as every college student experience, there's a lot of times where you're going to have to dip into it. I learned the hard way that that account, it got closed and turned into a checking account.
Oh, wow.
So that was one of my biggest eye-opening experiences of seeing banking 101. And then when I got into the banking industry, I understood why it was that happened. They want to ensure that the money that you put in there is to save for the long run. If you're going to be using your account frequently, like to pay bills, to do this, that's not what a savings account is there for. That's what a checking account is there for. So you want to understand that, and the features before coming to the branch or any bank to open up an account.
So talk to me a little bit about a line of credit against your home, because I've read certain things that a homeowner can get a line of credit. I just want to know, what can that line of credit be used for, and what's the process of getting that?
The thing is, the beauty behind a line of credit on your home is that you can use it mostly for home improvements, right? You can, if you have cabinets in your house that's going a little bit old, they're rotting, or if you want a new tub, you want new furnishing in your home, you can use that for that. But they also give you the flexibility of using it for emergency purposes. So if you do have children, 2 children going into college next year, it's important that you have that budget set aside for them. But in the case of emergency, you can always use your line of credit for that. I'm not saying to use it for that. I'm saying that
It's available for that.
it's available for you to do as you please.
Right.
So it's important to, if you want, I think it's important to have it.
Yeah.
Overall, I think it's important to have it. For a lot of people that don't have line of credits now, I know they're wishing they had it.
Yeah. So can I take out a line of credit and just hold on to it and save it for a rainy day?
Of
Or
course.
and what's the expiration on a line of credit?
Expiration is up to you.
Oh, really?
It's up to you. Every financial institution will have different regulations.
Yeah.
On average, it has like a 15-year draw period.
Oh, okay.
And no, a 10-year draw period and a 15-year repayment. So 10-year meaning that within 10 years from that time that you apply, that you got approved for the line of credit,
Yeah.
you can use it to take money out.
Gotcha.
At the end of that 10 years,
Yeah.
you have 15 years
Yeah.
to make repayments onto what you've drawn,
Right.
if you have a balance.
Gotcha.
So that's the beauty of it. And at any time you go into the bank and say, hey, you know what, it's my 9th year, I would like to refinance that line of credit so I can use it for another child that I have. For whatever I have coming on down the line, right?
So and you charge a market interest rate for that? Or is it below market interest rate? How is that? How is the interest rate determined
So now,
for a line of credit?
with the line of credit, it's always going to go in. It's going to go based off your FICO score.
Yeah.
So your credit score is going to impact it as well.
Okay.
But it's going to be timed with prime.
Gotcha.
So as prime rate goes up,
Yeah.
your rate on that line of credit is going to go up. As prime goes down, your rate's going to.
So it's a variable rate.
Yeah, it's a variable rate.
Okay. Thanks a lot.